Good morning, everyone. I'm Steve Ankerstar. Welcome to the Ankerstar Wealth Morning Show. We're coming to you live from Kansas City this morning, where we were all this weekend as a family for the Triple Crown National Invitational Showcase college recruiting trip, if you will. Team did great, 6-3 record, awesome stuff. So proud of the whole team there. But this morning, what we're going to talk about is and it's weird. It looks like I'm in a theater with this velvety backdrop. I'm actually in the lobby of the hotel, and it's got some weird lighting in here for sure. But today we're going to talk about three things. We're going to talk about retail earnings. Both Home Depot and Walmart released this morning, and that's obviously affecting the market. We're going to talk about the 2% inflation rate, to where it came from for the Fed, why they're chasing it, and do we really need it? And lastly, we're going to talk about the Tesla truck, not the pickup truck that's still coming off the assembly line. We're going to talk about the semi truck, which is actually being used by Pepsi. And there's like 15, I think, of them out now, or 30 or something like that. But yeah, they're starting to roll out, only in California for right now, but we shall see. With that, the standard disclaimer applies. This is a financial education presentation, and you have to do your own due diligence before acting upon anything you hear in this presentation. Full information is available at ankerstarwealth.com. Let's get started. Okay, here's the futures this morning. It's about 14 minutes to the market open. We're deep in the red, largely because of retail. If you scroll down here, you'll see Home Depot right in the middle here missed revenue and issues a muted outlook, which I think everybody right now is going to have to issue the muted outlook, because we don't know. We don't know what the Fed's going to do. So when you think, if you're running a major company, you're going to either, go, talk the best game ever, overpromise, or you're going to underpromise and then overdeliver. The worst case is that the stock gets hit right now because the leadership says, hey, it's a muted outlook, and then you overdeliver, right? And then the stock makes it all back later on. So for same thing for layoffs right now. Why are layoffs so popular? Because companies can, right? And it's future looking. And if everybody thinks the mother of all recessions is coming based off of interest rates, and that the Fed's just not going to stop until they break the whole darn thing, which I don't think that's the case, but certainly appears we're going to see a couple more interest rate hikes. But the point being is that why not just go ahead and bring those expectations in? That's what everybody's doing. So I would expect nothing else from the big retailers. So same thing for Walmart. They had a strong holiday quarter, which they tend to do, right? They crush it at Christmas. They just released those numbers this morning. They were great, but they guided down because of the outlook, right? So they can't just say, hey, we're going to kill it going forward, because there's no guarantee that they are, because we don't know what we have on our hands. So that's it for the retail. Again, last week was in the red largely as a week. This week is starting in the red, and I would imagine there'll probably be a red week here. So don't forget, there's 5% CDs out there available on a 1-year basis. So that's a lot of folks are going, hey, let's do that for now and wait for the calm, wait for the volatility to pass. Okay, that's first topic. Second topic out there is, why does the Fed chase a 2% inflation rate? So we went above 8. We're kind of coming down from that now, a little blurb back up earlier this month. But what's magic about 2%, and where did it come from? I found this very instructive. So again, back it up a little bit. Fed has 2 mandates: keep inflation under control and full employment. Right. So that's what they're doing with these interest rates. Well, unemployment has not been a problem for now, and then really not projected to be a problem because COVID kind of helped us with that, as far as, restaurants and stuff still can't get workers. And, so even though there's layoffs and it's not a 1-for-1 thing, for the most part, we're fully employed for those that are looking for work. But for the ones that are, for the other mandate, the 2%, it's been criticized. I'll not zoom in, but I'll highlight the comment in there. It's been criticized that 2% is an arbitrary target. And I would say that's true. So then the question becomes, if we don't get all the way to 2%, are we still going to be fine? And I think the answer is, well, we've seen that so far. The economy is not slowing down in spite of the big rate hikes that we've had. And we're still doing just fine. So do we really need? There's a video there if you want it. But really, it's only been around from, I'm trying to find the exact number. Not that long. It was not until there it is. It's the one above that. It's not until 2012 the U.S. declared that 2% was its inflation target. So before that, it was a little bit nebulous. So, and there's been lots of evidence that, 3 to 4% would actually be okay and not as damaging as people originally thought. So again, this experience with the inflation going up, we don't have it very often, but we had the data points from the 80s, but now we're having the data points again of what happens when you have the big inflation run up and how long does it take to go away, what damage does it actually do. So again, this will be studied for decades, probably until we have the big run on inflation again. Or depending on what you think caused the inflation, if it truly is giving money out into the pumping money into society, well, then we may see that sooner than later, right? Because that appears to be a way forward for politicians to help try to solve a problem out there. So in some, 2%, a little bit arbitrary. I don't think there's nothing magic about it, if you will, but you got to have a goal. Otherwise you're, going to waste, you need a number to tie it to tie your policy to. So right now the number's 2%. Maybe that changes in the future, but certainly won't change anytime soon. Okay, last thing we'll talk about today is the Tesla semi-truck. Here's a picture of it. This article's from CNBC today. It looks Tesla-ish, right? So it's finally here. There's a 16-minute video. We'll toggle over to that in a second. But first announced in 2017, Pepsi pre-ordered 100 of these trucks. It looks like it says 15 in Modesto, and then we have 21 in Sacramento. So what's that? 36 between the two of them. And there's 500-mile ranges, blah, blah, blah. You can get into the specifics of that. I'll toggle over to the video while I talk about the stock, if you will. So anyhow, we'll let that run in the background. Again, Tesla, Tesla stocks has kind of been it's a cult stock, right? And nobody knows how the story is going to end. Obviously, I have a strong opinion on it, and I've stayed clear of it. And it had a big run up and then a bigger run down. Now it's back on the run up, and I think this will help. But if you're valuing Tesla as a car company or truck company, an automotive company, let's just say that, then it's way overvalued, right? And it's going to come crashing down to below 100 if it matches up to anything we have as far as the other car company or automotive companies that are out there. If you think that it's going to parlay into a tech company, then it's really undervalued, right? If Tesla is now going to make robots that work around the house, or your, golfing buddy, or, wherever this AI / robot / technology future, if Tesla is a leader in that outside of the automotive space, then that's going to mean that the stock is grossly undervalued. Right. So if you're moving in on it, you got to have faith. I've been recommending against it for a long time. I was wrong for a long time. Then I was grossly right for a long time, as the stock came crashing down. But it's really up to you. Again, I'm not putting folks in and I'm recommending against it, but I can't say that I'm right because I don't have a crystal ball. But Tesla semis are out. Very interesting for the world to have to see those out and about in the wild, at least in California anyway. So that's all we have for today's show. Thank you so much for your questions. And make sure you check us out online and like and subscribe. And with that, we'll see you back in the morning. Bye.